Hi, everyone. So today I want to talk about risk management because it'll be a common thing that comes up in some of the conversations we'll have. So be sure in your notes, in your notebook, or whatever tool you're using uh, to write down risk management because this is probably one of the things that as we talk about different investments and what they are, etc. You'll find a lot of times that as you look up information about them, they will talk about risks, right? And you'll have to start to define what risk means to you. And the thing that most people equate to risk is losing all their money. That's the ultimate risk, right? Is that if I put $1,000 into an investment, that if I lose all of it, that's a huge risk to me, right? Because we obviously, when we are investing, we want our money to grow. Uh, we want to earn interest or whatever on it, or have it increase the capital that we have, right? So over time, that $1,000 grows to $1,500 or $2,000 or whatever number you can dream of, right? So risk is about what do you do about the losses, right? What do you do about those? How do you prepare yourself for that? Okay. Um, and how do you learn about it? How do you learn about it? Um, because ultimately, as you start reading about this, as you start learning about the risks that are involved in the financial markets, and there are many, there are all kinds, right? But all of it ultimately can end up creating a loss, big losses, right? I've experienced some big losses in my life from a financial perspective. Um, and I have a particular way that I deal with that, and I've learned a lot about that over the years because, I'm in the game, right? Uh, I don't sit on the sidelines and watch other people making money. I make money, on this stuff, but I have had losses and I learn from every loss. Okay. Because that's important. It's important to learn no matter what the circumstances. And so risk can come in many forms. So we'll talk about some of the forms that it can take, right? Um, and we'll talk about some of the strategies. So there's a couple of strategies that are really important here. We're going to talk about one in a little bit of detail today. We'll talk about one of the other approaches in another video because I don't want my videos to be terribly long. All right. I want them to be fairly short so that you have something small to sort of think on, reflect on, do something about, etc. So, risk. What are we risking? Clearly, we're risking losses. We're risking that we put $1,000 in and we lose that $1,000 and can't get it back. Now, risk is a relative term. Okay, so what does that mean? Risk depends on a lot of variables. Okay, so for instance, your time horizon. How long do you have to recoup a loss? Okay, so some years ago, 9/11 in 2001. I was alive and well then. I was working at a contract at Boeing in the Pacific Northwest. And I knew as soon as those planes hit the towers, as soon as we knew what was going on, it was like I knew I was losing my contract work. And that was my job. That was my job at the time, right? And so I was out of work for 9 months. Okay. Now I was in my 30s. I had time to recover. I have recovered. But let's say if 9/11 happened today, I'm 60 now. If 9/11 happened today and I lost everything or had such a huge loss, as well as losing my job, okay, um, I would have a lot less time to recover. So your time horizon can do a lot for how you feel about your risk and managing your risk. Okay. Now, I'm also many years, I was a fairly passive investor, meaning I would put my money into an investment instrument and I just didn't think about it anymore, really. Right. Well, now as I'm older, as things may happen out in the market, as things may happen politically, as things may happen financially, um, I may decide to move my money to safer investments for a time being. So, for example, when the pandemic hit in 2020, um, I didn't want to lose all the money that was invested in my 401k. Okay, so you may not know yet exactly what a 401k is, et cetera, but it's a retirement account, and we'll talk about that. But I didn't want to lose all the capital that I had in there because I didn't know what was going to happen, in the aftermath of COVID lockdowns and this and that and the other thing, and all the disruption that occurred after the pandemic. And so I basically moved all my money out of active investments into like a money market account within the 401k. So it didn't pay a lot of interest, there for the longest time, that account was only earning maybe less than 1%, on the money in a year, but I didn't lose the capital, which was extremely important to me at the time. Okay. Now, if I were 20, I may not have cared, but I was in my 50s, getting close to that golden decade where, you have to make the decision of when you're going to retire and all that kind of stuff, right? So that was my decision. And it was my decision because of what time horizon I had left and my risk tolerance with the factors that were going on at the time, the variables that were at play. Now, we didn't know if things were going to completely fall apart. And, seems like we managed pretty well, although inflation, kind of took hold. But I left that money in a money market for quite some time, right? And in fact, I had a money manager tell me once, you got to move it out of there. And it's like, no, I don't. No, I don't. Okay. Because it's my money. I decide. Okay. And so, from a risk tolerance, and a risk management, that's a huge set of capital I didn't want to lose. Okay. Now I have other investments. All right. Because one of the things that a lot of people will tell you is that the way to minimize risk is to have a diversity in your portfolio. So you're not invested in just the stock market. You're not invested in just retirement accounts. You're not invested in just stocks or bonds or treasury bonds or whatever it is, right? So if you diversify, you can have a better chance at, if the market is tanking here, maybe it's not tanking over here, And so many people talk about diversification, which we will talk about that in a little bit more detail in another video, because that has some specific approaches associated with it. And I am diversified. And in fact, if you, even at 60, even at the age I'm at now, you might look at certain things that I invest in and go, well, you're very conservative over here, but you seem to be like radical over here. Okay. And maybe that's true. maybe that's true. I was talking to a retirement guy here recently because I'm starting to think about retirement and if I want to retire at 62 or 67 or whatever it is. And I'm sort of settling on 67. Um, if I can make it that far in terms of like uh, being okay with my job until then. And uh, and he was talking to me about because I told him, I said, I have certain investments, and you'll find that as we're talking, you may find, why is she investing in that? Right? That seems a little risky. Um, but actually, I think conditions are really good for it. You know, and plus, I did a lot of research, and I talked to a lot of people, and I did all the things that I'm encouraging you to do, which is to read, talk to people. Um, learn about these things, and as you learn and you invest a little bit and you see how it goes, and you are learning all the time, right? You're learning all the time. You take that first step to initially invest in something, and things will happen in the market. You'll see how things behave, right? You'll see what happens, and you'll get a sense for yourself what makes sense. Okay. And like I've said before, which I will do a video about this, where you can sign up for brokerage accounts, where you can trade virtual money. You don't have to risk your money. And that is a way to kind of get a feel for things. Because honestly, some years ago, I got interested in options trading, and I wanted to learn more about that because I had been introduced to this idea at a conference, and I really liked the idea. And I also was a financial planner for a little while in my career, and that's where I got introduced to it at first. And I thought, oh, what a great idea, right? But when I went and got my first brokerage account and started learning how to do this on a paper trading platform, I was I was emotionally triggered. Let's just say, that I lost a lot of paper money, and once I got over that initial shock of just how much a virtual trading platform actually mimicked real life, I was grateful for the platform, because it was like, okay, great, because that was not my money. Yay. That was nobody's money, actually. Uh, because what these trading platforms allow you to do is they mimic the market. They have the market at play all the time. And so you can play trade, do these virtual trades, with a click of a button. You can go, okay, I want to put $10,000 into my virtual trading account, you know, um, and do it as a simulation with the actual live market underneath it, which is very cool, right? Because you can then get a feel for okay, so if I want to invest in a tech mutual fund that has a higher risk, okay, so what does that look like? And you can see it play out in a virtual account. Okay. So the hands down bottom line strategy beyond diversification and all that is how you educate yourself. It's how you learn, and that you have a way of learning, and you learn from everything. So let me give you this analogy as well. Probably a lot of you who are watching this episode or listening to this episode, you will have maybe a sports team that you like to watch. Okay, maybe it's the NFL, maybe it's college, maybe it's, some of these international sports. Every team is going to practice, and they're going to practice certain situations, right? Where there's no real skin in the game at all. If they run a 2-minute drill or whatever the drill is, they're trying to simulate game conditions. Okay. But even if you don't score, even if you have a penalty come up, or even if you have some of these negative outcomes, you learn from those, and you're trying to mimic what is a live situation when the game is actually on the line. Okay. And so that's what paper trading is all about. Okay. Because just like sports, right, you will practice these things and then you have to go and actually do it. You actually have to go to a game and do the thing. Now, you may get into the game and not run into that kind of situation, that 2-minute drill or whatever. You may not, and that's okay. But if you do, you will at least have practiced it and you'll know how to deal with it. Okay. And you can be successful. You might not be successful. But the really good teams, the really good athletes, they will learn whether it's in a simulated environment or it's the real deal. They will always be learning. So, you can call it the ABC method or ABL method, always be learning, where no matter what the circumstances, no matter what the situation, no matter the outcome, you're always learning. Okay. So that's why it's important to have this notebook or, something where you can keep notes and you can as you're researching things, you can write things down or record things in some way, um, and reflect upon the things that you have learned. Reflect upon, okay, so that didn't work out, or that did work out. What were the conditions that made it successful? What were the conditions that made it unsuccessful? Okay. So as you're going along, like diversification, that might be a topic you want to research. Um, you know, Simulations, paper trading systems, you might want to start researching that. So whatever we have talked about today that interests you, make sure you've written down those terms and start researching them, because some of these terms I'm going to go into more detail about, giving you more specific things that you can try, if you so choose. And you will be ready for when a episode pops up, right? Where I'm talking about that again and, taking the next steps, right? Because part of being successful is that you're preparing, right? By doing your own research, you're preparing by doing your own learning, you're preparing by finding resources of information that work for you and fit your personality. Okay, because there's lots of experts out there. In fact, that's one of the reasons I am constantly Googling things myself, is because there's all kinds of different opinions about company performance, financial markets, all that kind of stuff. Like right now, there are lots of people who do believe that there's going to be a massive market correction. Now, I don't know if I believe that or not. So far, the Fed seems successful in having navigated the pandemic and the after effects of that. But is there something lurking out there? I don't know. It's possible. There's certain things that are happening in financial markets right now that have me wary, have me alerted, that I watch for these days. But so far so good, right? But there's certain decisions that I've made, like even now, the big bulk of money that I have sitting in that 401k, I still have it mostly parked in a money market fund. At least it's earning a little bit more interest now since the Fed interest rate has gone up. So yay, it's not earning less than 0.5% or whatever it was earning during the pandemic, but at least it's earning more money. But I haven't lost that capital, right? So I do other things with some other pools of money, but that, even still, I have kind of left it parked on the side, so to speak, right? Because I don't want to lose that capital this close to retirement. you know So again, time horizon makes sense. Your learning strategy makes sense. Diversification will make sense in making sure that you can manage your risk. So as we talk about things, I will point back to risk. I will point back to that at different times because that will be a touch point along the way. Diversification is likely going to be a touch point along the way. Your time horizon is going to be a touch point along the way. Because if you find these episodes and you're in your 20s, your time horizon is your friend. Okay. It can mitigate a lot of risk. All right. Um, if you're 50 or 60 and you run across this, your time horizon will make it such where you may be a bit more conservative in what you do and the decisions you make. And that's okay because that's okay for you. All right. Um, so a huge part of this is that you want to develop for yourself and your situation, your current circumstances, your plan for the future. That is going to drive a lot of what you do. And so as you learn and as you experience things, that will get more refined, more refined. There's not a one thing fits all or one solution fits all in the financial markets. So many articles you read are because you're reading it for a particular reason. And for that particular reason, a person is going to have a particular opinion about it. And so you're learning to develop your own opinion about things, your own perspective about things. And risk, depending on what's happening in the market, like right now, as I do this episode, we're coming up against a political election, right? Oftentimes during those periods of time, as we're hitting a presidential election, things can get a little wonky in markets. Markets react to who's elected and who's not elected, and all this kind of stuff, right? And there's a lot of geopolitical things happening right now that make it very interesting. From okay, so what do I do with this investment, that investment, all that kind of stuff, right? And you will start to navigate this world as you learn and as you do things, as you practice and do, that will start to hone your own decision making. Okay. Because honestly, any investment is more risky when you haven't learned what it does, how it works, etc. Okay. So for instance, if I had not read as much as I had read about mutual funds before investing in them, if I had just gone and just, taken a dartboard and threw a dart and go, that's the mutual fund I'm going to invest in, that would have been a bad strategy. Now, it may have worked out, right? But it was equally likely not to work out. Okay. So part of what you want to do is you want to learn enough about an instrument that you are more confident that you understand what you're doing to some degree. Okay. So for example, I teach this to students all the time from a financial perspective about investing, because I've taught courses on how to read financial statements of companies, publicly traded companies. And I give them a lot of information, and I'll refer you to some information that I have about this actually, as we go along. But it's like, if you don't know how a company makes money, don't invest in them. That's part of your due diligence. That's part of your knowledge base, that you get what the company does. Okay. So for example, one of the things I've talked about a lot with students is, Enron. What did Enron do? Right? If you watch the documentary about Enron, many people didn't quite understand what it was that they did. Now, people made money on Enron. They sure did. Okay. But there are a lot of people who lost a lot of money on Enron. Okay. And part of it was because the investing public didn't know what they were investing in, and nobody could explain it. Okay. But like, for example, if you look at Boeing, you understand what Boeing does. They build airplanes. They build military airplanes. They build military equipment. Okay. So that's easy to understand. It's easier to understand. So if you invest in Boeing or Starbucks or Microsoft, you kind of understand what they do because you have exposure to them on a daily basis. You might even buy computers or peripherals or this and that and the other from these people. You might buy coffee from Starbucks, right? So you get an idea of what it is that they do. That's part of your learning, right? You know, you um, so what's crucially important about any of this is having that notebook as I talk about various different things, various different topics, write down certain things that I talk about. It's like, oh, I want to know more about this. I want to know more about that because I will go into more detail about some of these as we go along. And as you learn and as you read and as you listen to episodes, uh, you'll start to get a feel for this, and you'll say, "Oh, I think I want to follow that strategy. That feels right to me, based on what I have learned, based on what I understand. I'm good with that strategy. I'm going to go with it." Okay, and so again, it is up to you. You decide. You decide what you want to do, but it will be based on your research, based on your learning, based on your comfort level. Okay. That's the bottom line for me in helping to teach you about these things. All right. So that was my treatise on risk management. And I'll talk to you again soon. Thanks.